Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Tuesday, May the 20th, 2008. The headlines out of Switzerland this morning read, "Dollar rebound on view that Fed would hike rate later this year." The dollar rebounded from a 2.5-week low versus the euro on Monday, after a key forecasting gauge unexpectedly rose in April, suggesting that a sharp economic downturn in the U.S. might be nearing a bottom. That eased fears about consumer confidence and reassured investors that the Federal Reserve would have room to hike interest rates later this year. Fed's aggressive interest rate cuts to ward off a recession have undermined the dollar's appeal to foreign investors seeking higher returns in favor of the euro and other high-yielding currencies. The euro-dollar dropped to a session low of 154.86. The dollar-yen rose at 104.69 and the dollar Swissy at 105.73 peaks, as investors cheered news that the private conference board's leading economic indicators index rose at 0.1% after a matching increase in March. Economists had expected a flat reading in April after the March rise, which had followed 5 straight months of decline. The dollar-yen traded up to 104.47, and the dollar Swissy rose to 105.22. The pound-dollar went lower to 194.90, after hitting an intraday high of 196.24. The dollar loonie was down at 99.21. Forex traders also attributed the dollar's rebound to position squaring after last Friday's sharp sell-off, sparked by a report showing a sharp drop in consumer confidence to a 28-year low in May. Minutes from April FOMC meeting are due on Wednesday, and investors will look for additional confirmation that the Fed has finally moved to the sidelines. The U.S. interest rate futures were pricing a 90% chance that the central bank would leave its benchmark rates steady at 2% in June. Prospects for a rate hike by the end of the year were around 92%. That is reassuring news for the dollar bulls, who are on edge about oil prices that have surged to a record above $127 a barrel. Analysts said inflation worries would keep the market focused on U.S. producer price data due today. However, robust readings from the German ZU and IFO sentiment indexes due this week could boost the euro by reinforcing the case for the European Central Bank to leave rates on hold a while longer rather than cutting them. The Eurozone rates stand at 4%, and most analysts expect the ECB to hold them there to fend off inflation. The Bank of Japan is widely expected to keep interest rates on hold at a 2-day policy meeting that started on Monday. The Asian session was very quiet. The dollar was a little weaker from the closes seen in New York on Monday, as the Asians suffered from another very quiet session. Concerns continue to worry investors that the U.S. economy is still struggling to show signs of recovery. The market is awaiting any data that will confirm the U.S. economy is starting to be restored to health, following the slashing of interest rates by the Federal Reserve over the previous months. Today, investors will be wary of taking any positions in front of the important German ZU sentiment report and inflation data from around the globe. The euro rose to 155.43 from 155.05, as expectations for the ZU is seen as improving on the previous month, with greater confidence returning to the German business environment. It is expected that the Business Confidence Index will rise to 102.7 in May. It is also expected that the Investors' Confidence Index will rise to a minus 37.5. However, the dollar dipped to 103.94 from 104.47 against the yen after the Bank of Japan left its rates on hold at 5%, which was widely expected. And Nike was down in the late afternoon trading. The pound bounced to 195.46 from 194.82, and also found some strength against the euro as it reached 79.47 earlier in the session. This was despite George Soros saying that the UK economy was in the worst possible position of any leading economic country, and that the issues facing the UK could be greater than those already seen in the States. The source believes that the huge spiral in housing prices and the fact that the UK economy is also dependent on financial services industry will hit Britain very hard. The Aussie hit a new 24-year high against its US counterpart, reaching 95.92 as it spiked up from 95.19 earlier. The Australian Central Bank released minutes from their last meeting, and they showed that the RBA had actively considered raising interest rates once again as inflation was uncomfortably high. Continuing higher oil and gold prices are fueling the Australian inflation rate. It seems also that carry trades are back in the forefront, as risk appetite has again gripped the markets. The ever-continuing rise of the Australian dollar is being fueled by a greater demand for coal and iron ore, especially from China, both of which are abundantly furnished by the Australians. That concludes our news for today. We hope you're finding this beneficial to your trading, and we do appreciate your viewing. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Trading Center, where our motto is Traders Helping Traders Succeed in Forex. There is also a link to our Yahoo forum, which is also called Succeed in Forex. We hope you'll visit us there soon. We hope you'll be able to join us for our next Forex News broadcast. Until then, have a great trading day and happy pipping.